All right. Back to work. Hope you guys had a fantastic holiday weekend. Boy, back to work tonight. We had a fantastic week last week. Had a great start to the week this morning in the morning trade room. Well done today, all the students in the morning trade room. And we have a ton of great trades I'm tracking for tomorrow. We have two really simple and important clues right now on the charts. We get some bullish ranges, and we get a lot of major resistance right now overhead. Put those two clues together, and it's bear traps, breakout pullbacks, and bear traps on my radar for tomorrow. By the time we're done the video tonight, you will have an easy roadmap to use lots of breakout pullbacks and especially bear traps to make money for tomorrow. Now, before we jump in and go over my favorite trades that are setting up for Wednesday, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. If you like these videos, if you enjoy these lessons, hit that like button for me. Give me a shout out down in the comment section. Either way, thank you so much for tuning in, supporting the channel. But enough of the intro. Let's go make some money on what feels like a Tuesday, but really is a Wednesday because we're off on Monday. Now, let's start off charts here for tonight. I got my 60-minute time frames in front of me. Nasdaq and the triple Qs, the Emini and the SPY. What are these bigger picture 60-minute time frames telling us right now? Well, they both tell us one very important thing, but there are two really important clues here on the chart. We're bullish into a trading range on the S&P, bullish into a trading range on the Nasdaq. Now, if you know me pretty well, you know I love range-bound markets because in a bullish market into a trading range, buyers are buying low and trying to punch out through those highs, right? Buyers are buying low and trying to punch out through those highs. So buyers have all the control over momentum right now, and it looks they're gearing up for a breakout going higher. But the second clue is very, very important, right? Lots of overhead resistance on the 60 minutes. We'll take a deeper look at this here in a moment, but that's a big problem, right? Every time the buyers have tried to go higher, they keep getting whacked right back down. So put these two together. Bull market into a range, wants to pop and rotate higher. We're running into resistance. The name of the game tomorrow is buy as low as we possibly can. And when I think about buying low, I think about bear traps. Bear traps are definitely going to be a big part of the roadmap here for tomorrow. And we're going to dive into this and talk about entry tactics and how to find good bear traps here in a moment. But before we do that, though, before we jump into some tick charts and talk entries, though, I want to make sure we're all on the same page here for tomorrow because there's quite a bit going on here the next few days and the next few weeks. There are four things on my radar for tomorrow. The big one, of course, is that retail sales number coming out at 8:30 Eastern time. That will kick us off tomorrow in our trade room. Later on in the morning, half an hour later, Michael Barr is the VP at the Fed. Remember, everyone is waiting to hear when will they cut rates this year. Will it be the first quarter, second quarter? We'll be listening in tomorrow to see if Michael Barr tips his hat on that for tomorrow. The third thing tomorrow is that beige book. Again, same idea, right? Everyone's obsessed with when will the Fed start cutting rates. We get an election later on this year. You know they're going to cut rates here at some point. The beige book will definitely give us some information tomorrow afternoon. Those are the three items on my list for tomorrow. You might also be wondering right now, what about earnings season? We're now beginning the first week of a 3-week earning season. There's nothing to worry about tomorrow in case you're wondering, but we do have a very big earnings report coming out on Thursday morning. So don't you dare miss tomorrow night's video. We'll talk about how to gear up for earnings season. That will be a bit of an appetizer because next week we have a ton of the biggest corporations reporting next week. So keep those three items on your radar for tomorrow. Retail sales at 8:30. We got Michael Barr at 9 o'clock and beige book at 2 o'clock Eastern time. And tomorrow night, we'll definitely come back tomorrow night and talk about getting geared up for that big Taiwan semiconductor earnings reports coming out on Thursday. But first, though, let's make some money on Wednesday first. Now, back to our charts. Remember, it's good to know when the news is, but we make our money trading setups and price action on the chart. Let's now go over my favorite trades here for tomorrow. We'll go S&P and SPY first. We'll wrap things up here on the Nasdaq and the triple Qs. As I mentioned in the introduction, a pretty simple idea right now, right? Bullish into a trading range. The buyers are trying to buy the dips and run this thing higher, but they're having a hard time, right? Breaking through all of this. Look at this area of resistance. Look at all these tops up here on the S&P and SPY. So it's no surprise that every time they try to go higher, they're getting whacked back down. Bull market into a range, major resistance. You smell that? You smell that? It smells like bear traps. It really does here for tomorrow. Now, let's talk about entry tactics. So I don't trade off a 60-minute time frame. I think tick charts make entries so much easier. This is a 7,000 tick chart. These are Ninja Trader charts. I highly recommend, by the way. 7,000 tick chart, upper left-hand corner. And that, of course, is the 21 EMA, in case you were tuning in and watching here for the first time. So be aware of what you're looking at here on the chart in front of us. Now, there is one very, very important clue on the chart right now, and that is this big range bound market. Now, you guys know me, right? I love ranges. If you're taking my free video course right now, you know I wish every day was a range day. Now, why are ranges so easy to make money with? Well, because ranges act like magnets. But more importantly, though, they rotate. They rotate down, up, down, up, down, and back and forth. And you'll notice what I'll do here. I'm going to measure the amount below, the amount above, the amount above, the amount below, right? We call these pendulum swings in our trade room. We talk a lot more about this, of course, in our free video classes. Right now, the buyers are trying to rotate off that low and complete this rotation back and forth. So we are an overall bull market right now, which means I love the idea of some breakout pullbacks, right? Love the idea of some breakout pullbacks. I definitely think there are some ways to buy it on the way up, ways to short it on the pullback, and ways to time the perfect entry on that breakout pullback. A lot of ways to make money, both long and short, if we go higher. But I want to start first, though, by talking about if we go lower. The S&P made a pretty strong move down, and usually those strong moves down like that, they're going to try to retest that low. So later on in the video lesson, I'm going to talk about as we go higher. So get comfortable, take some screenshots, take some notes. You got any questions? Hit me up in the comment section below. So I want to buy as low as I possibly can. That's the main component as we go into here for tomorrow. So if we go lower, there are really three different types of entry patterns I'm looking for. I have a beautiful bear trap setting up right below this 86 3/4. We have a higher high in price, and I'll bet there are a lot of buyers waiting right below that low. We call these bear traps in the free video course, right? It's a higher high in price. And remember, with these types of entries, you're going to want to see a nice, strong green candle, right? Closing above the moving average. We have a lot of examples of that inside the video course. That'd be a bear trap off a key level of support underneath us. One of my favorite types of trades in a range market looks like this, where strong run down, they retest, we trap the bears in, and then right back up again. We found one of these this morning in the morning trade. I'm in a fantastic session that took this morning. If we do end up taking out those lows, I'd like to buy what I call a double bottom reversal. Again, the range is the magnet. We're overall bullish, but here's a challenge though. It can be difficult to pick the bottom on that, right? I'm not a big fan of picking tops and bottoms. So if we do make that run back down to that low, what I'll do is watch closely. I'm going to use what I call a failure pattern. Again, I'm not a big fan of picking bottoms on this, because for all I know, the minute I buy right there is the minute this thing will keep on going, right, and run me out for a loss. So instead of picking the bottoms on this, let's wait and see if those bears can try a couple times. I'm going to use what I call the 2-try rule for what I call a 2 try, failure. Now think about this scenario, right? We're going to be at support underneath a range magnet in an overall bull market. This is a horrible place to be a seller, but if we can get some rookies trapped in, I can use their stop losses to fuel that run, right? Going higher. I call those double bottom reversals. Again, strong run down, they retest, we then trap those bears in, pop it up. Strong run down, they retest, trap those bears in, right? And pop it back up into that trading range. Now, this one variation of this kind of double bottom reversal, and it's not my favorite, but you know me, I have no crystal ball for tomorrow. I don't know exactly what's going to happen tomorrow. We may see a V bottom off this low. We may end up running down, taking out that low, and then instead of getting those bears coming in, trying once, trying twice, and give us an easy entry long going higher on this, what oftentimes happens, because there's probably so many buyers waiting down there, we may get a V bottom. Now, V bottoms are really easy to trade, but you have to be mentally prepared for them. Here's why I say that. A V bottom will pop right off that low and begin to grind higher. And if you're anything like me, right about here, right, that little voice in my head will start saying, come on, Joe, get in. You're missing that rotation going higher. Tell that voice to shut up and wait for the first test off of that low. That's why I said earlier, V bottoms can be a bit challenging on the emotions, because I want to buy nice and low, but that V bottom oftentimes will pop up and then grind going higher. Once you see that grind going higher, it's very easy. Look left, draw a trend line off that high, bring it down and pin it right at that big low. Now, watch closely here. Look left, find some prior swings, and I want that first test off the low of that channel. Now, I can't go over all the entry tactics in this video here tonight, but this could be a bear trap like I'm showing you right here. A lot of times these will get underneath the 21 moving average. The bears will try to sell short. We can then use their stops to fuel a failure into pullback combination. But again, the goal here is, if we V bottom off that low, don't chase it as it goes higher. Grab that bear trap, grab that failure, grab that pullback combination, and again, ride that move back up to the other side of that trading range. All right, so now you know more about the game plan I'm looking for. But if you're watching for the first time right now, this might be brand new to you and a whole new language. Bear traps, failures, double bottom reversals. What the heck does all this mean? Don't you worry though. I teach all of these entry patterns. I have hundreds of examples of bear trap reversals, double bottoms, V bottom reversals. I cover all of this in my free video course. What I'll do is I'll put a link up there for you. Grab that little information button that popped up there in the upper right hand corner. Take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our morning trade room to know exactly where the best winners are going to be each day. More importantly though, that free video course will teach you my 4 favorite entry patterns, traps, failures, how we run stops to make money. If you're not making consistent money right now, if you're missing the best trades each day, if you're struggling to qualify for a funded account at a prop firm, take that free course. It will give you an easy roadmap to find lots of winning trades each week. It's perfect for someone trying to make the jump into full-time trading. And by the way, too, if you can't grab that link up there, I'll put all the important links down, the description of the YouTube video. I'll put the free classes links down there, the trade room membership links. We get together every morning and trade together at 8 o'clock Eastern time. I'll put that information, the description as well. And if you're on Twitter, I post a lot of videos and chart updates on Twitter during the week. I'll put my Twitter handle down there. Give me a follow if you're on Twitter as well. So now you know where to learn more about all the entry tactics I'm talking about here on the video. And again, the goal for tomorrow is to get this rotation going higher, but buying as low as I can, which again could be a bear trap below that level. It could be a double bottom reversal. It could be that V bottom, right? That pop up and that grind. Remember, don't let that monkey brain of ours talk us into getting in too early. Wait for that first test, right? And buy that low. Now, let's talk about the fun part, right? If this thing keeps going higher, there are quite a few ways to trade this market. If we go higher, let's now transition now over to the Nasdaq. The Nasdaq's getting lonely over here. Let's grab the Nasdaq. Now, of course, everything we talk about in the S&P can be applied to the Nasdaq. The Nasdaq can be applied to the S&P. It's all very much interchangeable. Over on the 60-minute time frame, on the NQ, same idea. Bull market into a trading range. Buyers are buying the dips right now, and they're trying to punch this thing up through that range high. And again, much like the S&P, they are running right into some pretty significant overhead resistance, which really is this whole entire area. Every time the buyers buy the dip, they're having a hard time getting this thing to push on through. And so we'll talk about a way to buy maybe a breakout pullback as we go higher here. Let's now drill down to some tick charts. Again, I don't like time charts really that much. A 60-minute time frame is pretty much the only time chart I use each day in our trade room. This, of course, is a 4,000 tick chart, and then again is the 21 EMA. On the Nasdaq right now, we have a similar situation. We have a bull move up into a trading range. And remember, ranges love to rotate. The amount we go below the range, the buyers want to rotate going higher. They want to take out that pendulum swing up overhead. But again, you can see for yourself, right? We run right into all of this major area of resistance. On the S&P, we talked about buying that bear trap. Remember, the goal is to buy as low as possible, right? So bear traps are probably where the money is made here for tomorrow. Bear traps underneath that prior swing, right? Bear traps on a retest of that low. Trap those bears in with that 1, 2, that 2 try failure. Back up we go, right? Or that V bottom. And again, getting that kind of pop and grind channel. I have a lot of examples. I probably have 100 examples of this setup right here inside of that free trading course. You can see one right here, right? Pops up, grinds up, find that channel underneath that low, right? There are so many of those that set up every day in our morning trade room. So we talked about this a moment ago on the S&P. I'm not going to go over that again here right now on the Nasdaq. As we go higher, right? I mentioned earlier that I like the idea of some breakout pullbacks, okay? There's a bunch of ways in which we can trade that. Now, first of all, as we're going higher, right, I want to buy as low as I possibly can. What is the one setup? What's the one pattern setup? We talk about this a lot in the free video course. What's the one way? If we see a very strong run going higher here, how would I buy on the way going higher, right? I wouldn't sell it because, of course, we're bullish overall. We'll talk about selling short here in a moment. This one pattern, though, it's a bear trap. So as we go higher, I want to buy as low as I possibly can. And I'm going to use this one simple pattern. It's called a bear trap. Right, it's a higher high in price. Usually these will be a very strong pop-up. They'll separate away from the 21 EMA. You'll see a shallow pullback, a higher high in price, and you'll see a nice juicy green candle coming in. A little bit below the moving average. It'll close right back above that 21 EMA, and that will give you that bear trap entry, right? That, again, it's a trap entry, it's a bear trap in this example. Now, just a heads up on this. In these types of situations, these are half-size positions because you're buying right into overhead resistance, right? These are not full-size positions. In our trade room, we talk about how you can take your account and go, okay, the best trades are full-size positions. The ones that are good setups, but maybe not in the best location like this one, go half-size, go quarter-size, right? That'll keep you in the biggest positions on your best trade. So as we're going higher, I'm looking for that bear trap. Now, the next part is I want to pay close attention to this pendulum swing, right? If we can get through that pendulum swing and start to really kind of push through on some strength, right? Get some real good evidence that we're convincingly breaking through that pendulum swing, then what I'll do is I'll begin looking for what we call a breakout pullback. This trading range, right? That trading range can now be used as an area of support. Okay, these are pretty simple, right? They're called breakout pullbacks. There are two ways, well, there's one basic way to do this, but really two ways can implement it. So for example, if we see a strong run going higher, we may or may not get that bear trap going higher here. But if this thing really, really rips, right? If it really, really races and really punches and runs higher here, now what I'll do is I'm going to take what was resistance and basically flip that into support. And then begin looking for that, again, what was resistance as an area of support. Again, they're called breakout pullbacks, right? So if we do get that strong push higher, this whole area really, for the most part, right, becomes now a key area of support. So we push up, right? We pull back. Now, again, I mentioned earlier, I'm not a big fan of trying to pick that bottom. Right? For all I know, it'll keep going. It'll keep on going back into that trading range. So I'm not going to make that rookie mistake I did almost 20 years ago when I was a new trader and try to put a blind buy order right there, right? Simply buy that pullback. Not the way I want to trade here. It's not very reliable, not very consistent. What I'd rather do is look left, right? Find some highs off that low. Find those channels. You'll learn a lot more about channels in the free video course. Get underneath the moving average, and this is where we look for that bear trap entry. We trap those bears in, letting them try a couple times here, and then as my first mentor would always say, use their pain. Right? Buy into their pain, buy into their stop losses, because think about this. Buyers are going to want to buy that pullback. They're not going to want to buy way up here into that major area of resistance. We're an overall bull market, so we know we're on the right side of that long-term momentum. Now it's just a matter of time in the entry at this point now. We get that breakout pullback off what was resistance, now becomes support. We don't simply pick the bottom on this. We get those bears trying a couple times, right? And we buy right into those stop losses, because one of the easiest ways to make money in trading is knowing what direction all momentum is and then trapping traders on the wrong side of that momentum, right? Bullish over momentum, get underneath that 21 EMA. And again, if I'm a seller and I get stopped out right there, only one way out of a losing short position. That's to buy your way out. Very easy way to use what I would call a failure into pullback combination. You'll learn a lot about failure into pullback combos in that free video course I mentioned earlier. Failure pattern, pullback combo. Where's the goal? The goal is to go back up and retest that high, right? That would be your breakout pullback. Now, we may not get that big move. We may end up running up, right? And then pulling back from there. Again, we'll simply look for that new channel, mark off that low. This one will not be as desirable, but again, we're still going to look for, can we get those bears trapped in once, twice, right? And buy into those stop losses, all right? The key here is this. The key is we want to get a strong punch going higher. Okay, that's kind of rule number one. Get that strong punch going higher. We need that momentum on our side to be able to trap those bears in and retest that high. That would be your breakout pullback as we go higher. Now, I mentioned earlier that if we're lucky, we can get both of these, right? We might go up and sell this thing back down again. How would you short a bull market like this? Well, first of all, we do not have momentum on our side. Can we all agree on that? This might be a lot of resistance overhead, but we have a rate cut coming later on in the first quarter, most likely, right? It's kind of a gamble to try to pick a top on this. What I would rather do is wait for price to get up into this area of resistance and now look and see if I can get some rookies coming in trying to buy shallow pullbacks. This is a very dangerous area to be buying pullbacks. However, if I see buyers come in and try once to keep it going higher, they go lower, they try twice to keep going higher, this is what I call a crown reversal. It is basically a bull trap. Buyers once, buyers twice, and we're looking for that nice strong signal closing convincingly below that moving average for that short. Now, again, these are one of those trades where it's counter trend, it's less reliable, it'll be a smaller position size, okay? Maybe a half size position, a quarter size position. If you're brand new at this stuff, it might be a zero position. Better off to stick with the more reliable trades, going with that trend, which of course would be that breakout pullback, right? And buying off the low of that channel. Now, I will tell you though, right? These can be very lucrative trades. And oftentimes, if we get that crown reversal, it'll pop down and grind over. Now remember, what do ranges do? Ranges love to rotate. So there's a good chance if it pops down and grinds down like this, I'm going to mark off that low, I'm going to mark off that high, and look for that short, right? Remember, it's the first test. We talked about this a bit earlier on the S&P to buy off the low. This is that same pop and grind move down, but these are two setups I'll be watching to short here off the high, right? We may go up into all that major resistance. Again, not a great spot to be a buyer, but if I can get these buyers to try once, try twice, I love that bull trap or that crown reversal for that short. And then who knows, right? Who knows? We may end up pulling back. We may end up bouncing hard off that channel for that breakout pullback I mentioned earlier. But look closely here, though. If it drops off that high and starts to grind down like that, okay, now we know we're not buying that anymore. We know ranges, right? They love to rotate back and forth. This could easily get the rug pulled out beneath us, and we can sell that bull trap, sell that buyer failure, sell that pullback combination. And again, you'll see a lot of examples of that. This will make a lot of sense once you go through that free video course. So I like the idea, right? I like the idea of that crown reversal off the high. And then we'll see what happens if it rolls back into that range. It begins grinding down. We can look for that run. And of course, we'll be looking to short that thing back down to take that low. Once we take out that low, it's that same idea. Buy it again. Trap those bears in. Don't pick the bottom, right? Time the entry properly with those failure patterns. Much easier to make consistent money that way. The other, right, the final kind of variation of this is a pop and grind channel. We've talked a lot about pop and grind so far. We may get this to pop up, and again, with the likelihood of a rate cut coming here sometime next few months, the market may float and float and float like that. If it grinds up, these are easy. Just mark that high, mark that low. You can look for that crown reversal for that short, but just make sure you're aware though of that breakout pullback, which is a pretty high on that. We're going to hold off the low of that channel, right? So use that pop and grind going higher. Again, these pop and grind channels make for very, very good entries. They pop up, they grind, they come back, and we look for that long, right, off that low. So similar to that pattern right there, up around these highs. And again, like I said earlier, right, if we were to, for example, pop up, begin to grind, I draw that trend line off the high, I find that channel, I go out, look left, and find those prior swings. Now I know where I want to trap those bears in for a move back up. But remember, if the rug gets pulled, again, a lot of resistance up there. If the rug gets pulled on this and we end up boing, right, moving right back down and grinding down like this, right? That grinder is the giveaway. Mark that low, mark that high. Don't miss that first test off the high of that channel. And obviously we'll talk more about that game plan tomorrow once we start seeing that stuff set up tomorrow in the trade room. All right, guys? The game plan, it's a pretty simple game plan for tomorrow. But you know the markets, they're going to throw some curveball at us like they always do. And that's exactly what we get together every morning, and we trade this stuff together in our members' trade room. 8 o'clock Eastern time tomorrow morning. Definitely grab all the links. Again, I'll put all the free course links, the trade room links, the Twitter feed links. I'll put everything you need down in the description. I can't think of any better way to learn to trade than to come out and trade with me every morning, ask a bunch of questions, follow along, trade along with me tomorrow morning in our morning trade room. All the links you need in the description of the YouTube video. If you have any questions, Any trouble getting access, please don't be afraid to call or use email, use live chat. We're always here if you guys have any questions or need help getting access to our free video classes. In the meantime, a fantastic day today. Well done this morning. All the students in the morning trade room, we're on a good roll going right now. Let's keep this going for tomorrow as well. Hopefully I'll see you tomorrow morning, 8 o'clock Eastern time, the trade room. If not, we're going to come back tomorrow night, get ready for earnings on Thursday morning. So don't miss tomorrow night. I will see you guys there. In the meantime, be well, be nice to each other out there tomorrow, and better be here next time. Adios, amigos. Bye-bye for now.